Right, next up then, we are going to get to our breakout, and I'm going to give us a comfort break of about, I want to say 5 minutes, but let's make it 7 minutes when we get to that. I'm going to give us a comfort break because we now need to just split up into two groups. And in our session this morning from Audit Level 1, we found that the breakout rooms unfortunately didn't work for all of the delegates. So we've come up with a different solution. So for today, all the Probe Audit Premium Plus delegates, in other words, if your firm uses Probe Audit Premium, if you audit using Probe, then you're going to stay in this webinar. We're going to take a comfort break and we'll continue after the 7-minute comfort break. If you use Audit International, then I'm going to actually include the link. Don't use it just now, just listen to my guidance for now. But this will then be the new Teams meeting that you are going to join. You wouldn't need to register again. That is just so that all of you can all safely, comfortably, easily move to another room then basically, so that you can then listen to Samu, who's going to take you through Audit International and show you all of these topics that we've now discussed. How is that actually playing out? What does it look like? Where are the documents that I need to complete to cover all of these elements of finalization? So that's what we're going to do after the break. But let's take a comfort break. For those of you that are staying in Probe, you can stay here. I'm going to keep up the heading for the breakout and then maybe just say comfort break so that if you are unsure, we will... It's 5 to 3 now, so let's say 5:03. So that gives us 8 minutes to continue. So if you need to move to that one, that will then give you a few minutes to safely move over there. If you are staying here for Probe Audit, you can just hang then, take a comfort break, stretch your legs, do what you need to, and then at 3 minutes past 3, that's in about now 7 minutes, we will then continue looking at Probe in this webinar. So no worries about breakout rooms. Don't go looking for breakout rooms. You either follow the new Teams meeting for Audit International or you stay here for Probe. All right. So I'm also just quickly going to stretch my legs and I will see you in 6 minutes now. Ladies and gentlemen, I hope you had a good comfort break. I see we still have quite a number of people in this room, so that is fantastic. I just want to confirm, if you are a Audit International user, then you should please follow the link. It's now been shared a few times. It's all the same link. Please follow that link to the Audit International breakout session. I was checking the session is live. Samu is in there, and so she will be presenting to you on Audit International on that side. I am now going to start on the Probe Audit Premium Plus methodology. So if that doesn't look familiar or anything like that, then you might want to just follow that link to Samu's side. Again, both sessions are recorded, so you will be able to watch the recording. If you happen to be in the wrong room, you will be able to watch the recording as soon as we make that available, both on the Success community and on YouTube. Right, good. Let's continue. For this section of the webinar, I'm going to switch off my camera. The reason is just that I'm going to work on my big screen, and then I'm going to look there and make sure that I click on all the right places. So I'm going to switch off the camera and make sure that I am showing sensible stuff for us. All right, so in the Probe Audit Premium Plus methodology for this session, of course, looking at finalization. So I've included in the slides are actually very short when you look at the Probe slides. I've really just included this one slide to show you which documents we're going to look at. So some of them we're going to go into a bit more detail, some of them I'm just going to mention, and there are some elements from some of these points which we will address in more detail. Firstly, when we look at disclosures, next session, 13th of March, and then some of the others when we look at reviewing an audit file in the third session of Audit Level 3 being on the 20th of March. All right. Okay, that's for later on. So let's now go to our caseware file. Good. So included in that link for download earlier today, you will find a caseware file, wrap up manufacturing, which will be delegate. Now, remember, our financial year end is 30 April 2023. That is what the client's financial year end was, and all the transactions and everything happened in that financial period. So note April 2023 and not February. Right. Good. When I go from the top in my engagement file, in my caseware file, you'll see I've got document manager, and then I've got this finalization folder. Now, some people maybe move this whole folder to the bottom of the file, doesn't matter, as long as you know that you've got your documents. Our documents start on 0200, 02, and then, because financials, of course, is 01, and then go through there. Don't renumber your documents. Don't ever do that, because then the documents are not going to talk to each other anymore. They've all been programmed to go look for specific numbers. So it's important that you don't renumber them. All right, so that's where we find finalization. And then we're going to start in the partner sign-off document. So that's 0200. That's the, I almost want to say the last document, but because it's first in the list, let's have a look at it from there already. But it's probably, in my mind, the last document that the partner is going to sign before he signs the audit report, or possibly even after he has. So we are only going to deal with some of the documents in here. You will see the numbers or the names of the sections are quite long here in the bookmarks. So this is the document map, of course, on the left-hand side. And if you want to have more space, you can always close your document map. But I'm going to open the document map because that helps me to jump to the relevant sections. This first part, where we talk about the summary of the financial statement level risk, as well as the summary at assertion level risk, where we have a lot of stuff in there. Those ones we will address when we discuss the reviewing of an audit file. So that is not going to be relevant to today's session in terms of specifically finalization. What I want us to have a look at is the partner declaration, or the engagement partner, the audit partner declaration. So in here, what we need to note is that the ISO 220, the standard on quality on audit engagement, requires the audit partner to take responsibility for certain elements. And so this checklist basically prompts the engagement partner to make sure that he or she has, in fact, demonstrated that involvement. So all of the questions will say things that will help you to say, if you say no, you're probably fine. If you say, hang on, Well, sorry, if you say yes, it should be fine. So did nothing come to our attention that may cause the firm to decline the engagement? Yes, then that's fine. If I say, hang on, sorry, no, it's when I say did nothing come to our attention, then I have to consider extra things. So yes, yes is a good answer. No means there was a problem, right? Also, where we have, let me just quickly check. I think we've got the, yes, we've got the electronic referencing activated in the default engagement file. So that means that when I tick any of these items where you've probably already done it, you can just tick the button block and it will automatically give you the reference number. If you in your probe firm settings switch off the electronic referencing, then you will have to go and select this from a drop-down menu the same way that you would have for any of the other items. Right, so that's the benefit in having the engagement partner references automated wherever possible. You'll save a lot of clicks there. Now, I am aware that very often the audit manager or maybe a supervisor or a senior in the engagement will be completing this section. That's perfectly fine because it does save the valuable engagement partner time. So it's not a problem as such. The important part is just that where everything's been done, the engagement partner has to review all of that, of course. And then at the end, the engagement partner has to sign off to confirm that things have been done as they needed to. So here I will select the partner's name. So in this case, I'm signed in as a user. This is my training username. Larisha Govender is the engagement partner. And as soon as I'm logged in as that user, and that is the partner that's selected or the individual that's selected, my sign button is activated. I can click on that, and that will then indicate that I signed off the partner sign off today. Right, so that's mostly the point that's most relevant there. And there is a point that I want to just highlight about the ethics that we spoke about earlier on. Let me just quickly check that. That was differences of opinion. Man, somewhere I had that point. Now I'm looking for it. You might find it before me, but all of the points that we have considered before are in there. Significant matters and so forth, reviewing the auditor's report, and so forth. They are all in there. Okay. So that's fine. Good. So that was 0220 partner sign-off. Let's go to the next one. Then back to my engagement file. We'll skip all the case view documents. We're just completing the, the case where documents. We are just completing the probe documents. So 0205 is the engagement team's declaration. This is where the engagement partner will, the team will now sign off stuff. So you'll see in my engagement file, I honestly thought I clicked, I selected subsequent events, apologies. So this is the engagement team's declaration. It looks exactly the same as the planning one, but now it is, of course, at the end of the engagement. So we've just changed the wording in there to say that has happened, I have, and so forth and so forth. And then again, we select all the individuals. Again, it's perfectly fine if someone goes and selects all of the individuals' names and has it there for them to tick off. I will then probably also say, this was the junior, that was the manager, and so forth. And then when they log in, they will have their little sign buttons to sign off. So again, I will just sign off for myself. I physically cannot sign off for anyone else. That is the engagement team declaration, independent of the client, not breaching any ethical requirements in terms of the firm's policies, keeping the information confidential. Good, that's the engagement team declaration. Then moving to subsequent events. So subsequent events, we said we need to consider whether there are any actual subsequent events. So these steps here are all procedures that the standard prescribes. So you've got to actually perform the procedures. What I've seen in the past is just literally in each of these input cells, just someone saying none identified, no subsequent events identified, no subsequent events identified, etc., etc., etc. This working paper is essentially your evidence to show that the person, that you've performed the work. So another person must be able to review your work, which is the evidence that we've got here, and see what you have done and understand and be able to come to the same reasonable conclusion as you did. Right. So that's why we need to actually document sufficiently. I almost want to say document sense here. Really document what you have done. So documentation requirements, what did you do? Can someone else reperform that work and still understand and also get to the same conclusion? So you can read through some of the points that we've seen here. A meeting is held when the financial statements require approval. I discussed this with Stefan Harper and Larry Attic on such and such a day. They didn't identify any, and so forth. Let's look at one specific question that I want to highlight to you is question 6. Question 6 says, obtain a written representation from management that all events occurring subsequent to the date of the financial statements were appropriately treated in the financial statements. Right. So yeah, you don't need to say, oh, done, or something like that. You can probably do that as well. But ideally, you want to reference this to where the signed management representation letter is. Now, the representation letter template is 0292. We saw that on the slide earlier, and we are going to look at the document. What is important is that that will not be the signed copy. So you want to actually include what you anticipate the signed copy's number to be. So here we said that's going to be 0292A, which will be the signed representation letter. If your firm has a standard number, that actually just helps so much, because then you know it's got to be 0292A, and then you'll remember when you bring in the signed copy. Otherwise, when you get the signed copy, you've got to come and check in here in 0210. What did I say was the signed copy? Or I've got to then come and include that reference. Right, so make sure that your items still talk to each other. I know that didn't all happen at the same time. Again, read your minutes. And then we say, I inspected the minutes of this meeting, that meeting, this, and this, and this. Now, what do we see here? A dividend was declared after year end. Okay, that is a subsequent event. And more so, it is a disclosable. Disclosable is the better word. It is a disclosable subsequent event, which means we need to go and now record a subsequent event. The fact that there was no event identified and so forth, all these other points, that's fine. We didn't need to record an event. But here I need to actually record an event. Now, before we actually go and record the event, what we'll see here, you have actually included it yesterday as I was preparing. So now I don't have to type it. You can just see it. Before we recorded any events, this would have just been completely blank. And we actually, in fact, wouldn't have had this table. If I look at my document map, it would just not be there. But as soon as I then went to go and say in number 7, read the minutes, oh, yes, a dividend was there, and we click record, then it's going to actually create a record. So I can then click and say add another event, and then I would document the items there. So remember, my source always, if I double click, it's automatically going to pick up where I come from, which might have been another place. In this case, we were already in 0210, and then I will document my event identified. I'm just going to type event so that you can see that come through. All right, then I'll submit that, and then I will have the other columns to complete. So let's see, what is the event? I'll state the fact. The dividend of so much money was declared on that date. Right. Then in the financial statement treatment, what do I expect to see in the financial statements? And then to see what evidence have I obtained. Now, in looking at or identifying, reading the minutes, you would probably see the minutes of the meeting. You would have seen the resolution signed by the directors. You would have seen the submission for the tax, dividend tax, what's the word? Yeah, dividend tax, with dividend withholding taxes. So all of those things would probably already be included in there. But we can't just guess that that's the case. You've got to actually go and tell us that's the evidence you have. So financial statement treatment, the dividend declaration has been disclosed in the note. We would have expected it. It is there. Great stuff. Conclusion, the disclosure is appropriate and in line with the requirements of the accounting framework. The dividend declaration has been inspected, reflecting the date of such and the amount of such, which agrees to the disclosures made. All right, and remember also, this is now not in your income statement testing because it was disclosed after year end. So you can't just refer to a working paper there. This is all literally done after year end. All right. I want to quickly also just show you step 10. Step 10 is a lot of considerations around the actual financial reporting framework requirements. So, for example, it will refer here to scrutinize sales invoices of inventories after the reporting date for evidence that what inventory's net realizable value is. You would have done the NRV testing, so you can just refer to the working paper, but don't just say none identified or something, because you can't say none identified. There are sales invoices for the period after financial year end. So you've already done the work, just include the reference to where it was done. And so that would be the case for many of these points. Right, so that's subsequent events and your conclusion then on each of those items, whether the subsequent event was treated correctly. Then we go to the going concern conclusion. Remember, in our very first document in planning, we considered what was the initial risk assessment. We considered going concern throughout. So we're really just concluding at this point in time. Why is my document not opening up? There we go. So at this point in time, I almost want to say a vanilla file. When there are no issues, this is what the file will look like. So there are a few considerations. So it does say consider whether management's initial assessment includes any of these, consider whether the results of the final analytical and so forth, and conclude. If you do identify items, you will record them. We're going to see what that looks like just now. And then I almost want to say the important part that I first want us to focus on is this conclusion guidance. So you'll basically pick the option that is relevant to your client scenario at the time when it's relevant. By default, it will already be on no doubt exists about the appropriateness of the going concern concept. That's kind of what we would expect. And then the audit opinion guidance here says we don't need to modify opinion with respect to the applicability of the going concern concept. Right. Right, let's see then. There is also a partner sign off there where the partner says he's reviewed, and same thing, we'll pick the partner's name, he can sign, and so forth and so forth. You'll also see, I didn't mention it earlier on, but if I have a second partner, I can always activate these. If we had an EQR, for example, a quality reviewer, I would have activated the EQR role in the planning documents, and that would then also have come through here and given a prompt to the EQR to also review that. All right, but let's now go back to the considerations, and we are going to record not a subsequent event. We are going to record a going concern event. So now we've looked at it and we see, oh, there is something. The entity is struggling with their cash flow, which has resulted in a delay in paying their creditors. So we're going to record an item. There is something, inability to pay the creditors when they become due, and we click record. The moment we click record, we actually now almost go into record mode, and we now have to record what is this event. So I'm just going to say struggling to pay creditors. Ooh. Good. And then any additional observations. So our observations would be, we inspected the trade payables. I'm just going to start typing that. And then explaining the trade payables age analysis, and there are a number of trade payables that are overdue. This includes the 3 biggest suppliers who supply the main parts for continued trading. So if this credit is withdrawn, you can imagine, then they can't get their main inventory supplies anymore, and the client will no longer be able to operate as they continue to provide credit terms to their debtors. So the debtors is not going to pay them in cash, and then obviously they're going to be in trouble. So what does it look like then after I've typed all of that in and I click submit? Well, now I am prompted for all the other elements. Firstly, in this table to say, well, what is management's response? Remember, we said in the theory, I've got to go ask management, listen, what are you doing about this issue? What are your plans and so forth? So there's management's response. What are your plans? Secondly, is management's plans going to work? Is management's plans realistic? Are they able to actually do that? And so forth. We've got our additional observations about having inspected, etc. And then we need to get to a conclusion about that element. So this is just a table for us. Almost want to use the words in summary. But what has also happened is now that we identified a going concern event, suddenly we have audit procedures to perform. So now the standard has kick-started procedures that says, right, now evaluate management's plans for future actions. We've said that, but now you are prompted for that. Select from the list of the actions that management plans to address to do this. Well, let's say they are going to increase capital, they're going to borrow money, or whatever they're going to do for that. And then depending on what you're selecting, your steps going forward will also adjust. And you've got a whole bunch of procedures that you need to perform, complete, to get to help you to get to the conclusion. And again, point 8, request a written representation from management and those charged with governance, if applicable, about their plans for future action and the feasibility of these plans. So, I mean, it basically guides you through that. One of my colleagues always talks about spoon feeding. Really, it helps you so much, this methodology, but we have to read and we have to document what we have done. Now, having then identified that event, having performed these procedures, what we now notice is that the option for no doubt exists is gone, or no longer ticked. So having then performed all of the stuff, we now need to pick one of these options as a conclusion. I don't know if any of you have the file open, so I'm going to quickly just tick them and show you what happens. So if I say a material uncertainty does exist about the going concern, but adequate disclosure, then this is our so-called close call, right? We should issue an unmodified opinion with respect to the applicability of the going concern basis of accounting, with a separate section in the auditor's report under the heading material uncertainty related to going concern. Okay, it's not that one. Let's say the material uncertainty exists, but adequate disclosure is not made. Well, what did we say? Qualified on the going concern basis. We know that's a problem, but it's not pervasive. If we believe it is pervasive, well, then we need to, hang on, let me just get back to the right item here. Good. It is pervasive, then it's a negative opinion. Adverse opinion. And so you can go through all of these options that the standard provides. Okay, and that will then help you to go to your audit opinion and to amend the audit opinion in the financial statements as necessary. All right, and again, we've got the sign-off as we mentioned before. So that's going concern. Next, we have the overall analytical review. You have a document that's given to you there as the overall analytical review. It's basically just the PONT analysis again. You can use that, or you can use Excel, or anything that you feel is necessary. But do not forget to perform your final analytical review. Okay. 0240 then is an evaluation of misstatements. So that will, again, show you some things. Now, what I just want to remind you is, I'm sure all of you know about the adjusting entries. So if you need to include or record entries as unadjusted, so they are basically on your schedule of order differences, you still need to record them as under the adjusting entries, but you will categorize them as unadjusted or uncorrected rather. So that's quite important, because when we get to evaluation of misstatement, we have quite, I just want to say, valuable information here, but you need to have recorded your entries in there to get to this valuable information. All right, so 0240 evaluation of misstatements. First of all, we are going to, let's calculate our final materiality. But this, remember, is a function, same functionality as the planning. And we will just simply confirm whether our materiality remains appropriate. So same basis that we select earlier, is it still appropriate? Yes, happiness carrying along. But then, because in our planning materiality, we had set it as 1 million and there's no reason identified to change it at final materiality, it will stay the same at 1 million. Right? Then we go to the next part. Now, if you didn't have any adjustments, no uncorrected misstatements, then the conclusion here would automatically have shown that you don't have any unadjusted misstatements, and therefore there wouldn't have been a whole detail or anything about the considerations. So you just need to be very, or almost want to say, not be surprised if you do see that people don't specifically have, that it automatically says it's fine, or there is no unadjusted misstatements or something. But in our file, of course, in order for me to show you what it looks like, we do have misstatements, and that's also then why it then prompts you to say, right, consider your conclusion about corrected misstatements, for the normal corrected misstatements, the reclassifying, and then uncorrected, again, those 3 categories, and then you'll have your overall conclusion. Now, you can, in this space, conclude on both your individual and in aggregate adjustments, or what we've done in this case is we've concluded here in aggregate for the normal adjustments, in aggregate for reclassifying and so forth. And then in our next table, we will then go into the detail for the individual ones. So that is then where this, I want to call it cool table then comes in. I'm going to just close the document map so that we can just maybe see a little bit more of it. Maybe I must also just zoom out a little bit, right? So first of all, here we have the table for what must show and what mustn't show. So what you will see, for example, is the misstatements corrected column will not print because we have not actually selected it for printing. So print misstatement columns, we have not ticked corrected. So that one is indicated in blue, and the other one that is ticked is in fact black. If I also select it, it will, in the column, it will turn black text, and that means now it is going to print and the other one won't print. Okay, so that's the first point. So you can switch those on and off. Then we have them per statement. So in this case, the balance sheet, and it lists the balances, the preliminary unaudited balances and the audited balances. Then if there are any corrected misstatements, now in some of the other columns, we have corrected misstatements where things were actually fixed. We have the uncorrected factual misstatements and other ones as may be needed. You have some warnings here, and then you will conclude on each of these individual misstatements. That's the way we've done it now. Have the individual misstatements in the table and the aggregate at the top. All right, that's the statement of financial position, statement of comprehensive income. The cash flow statement, evaluation of cash flow statement, we will address when we look at disclosure. And the same also, let me switch on the map again. So there's the statement of cash flow, and the same also for considering qualitative disclosure. So they're all, yeah, it's very, very helpful. It's already here. Okay. Then when we get to the overall conclusion, there you have a bunch of questions that prompts you, that helps you to make sure that you've considered, are these errors or frauds? Are they indicative of something more? And a whole bunch of questions that the standards require us to consider. And if you're unsure why or what is meant by this, you can even click on the little guidance button that will tell us why is this requirement included. The question here is not, is there an exception, yes or no? It is, have you done this, yes or no? So have I done it? Yes, and then it's there. Are you satisfied that the unadjusted differences do not in aggregate result, etc.? Yes, I am satisfied. And that's a sign off. If I say no, I'm not satisfied, then that's most indicating a problem. And then I'll have a comment cell to actually document stuff here. Even if I had said yes, and now my comment cell is not there anymore, I can always just right click there and say insert comment, and then I will have my input cell again to document my comment. Right, so there's a lot of options for us here. So that then includes the final materiality calculation. It includes consideration of the uncorrected misstatements relating to the balance sheet and the income statement. And then the other elements we will consider in our next session when we talk about disclosure. Right, that's evaluation of misstatements. Next up then, we will look at the consideration of the audit report or assurance report. Now, this is a document that gets me extremely excited. In years gone by, we always used to get to an audit opinion, but we never used to really have a document, a place where we could say, this is how we got to our conclusion. This is why I have a clean audit opinion. There's never that place. This 0250 considerations of the assurance report is your place. It's your documentation. It's your it's where it pulls all the strings together. So it makes me extremely excited. So the questions are literally linked to ISO 700, 701, 705, any of those points about other information, CAMs, supplementary, etc., where we need to consider things that's going to affect the audit report. Okay, so what will be the conclusion? Do I need extra paragraphs? And then for us to test that the audit report is actually showing that. It's an extremely helpful document, but we have to read carefully. We have to make sure that we answer it carefully and appropriately, and then fantastic evidence for us. So, for example, did we obtain any evidence that the financial statements are materially misstated? No. And the moment I say yes, have a look at this, because now question 2 says, are comparatives materially misstated? But when I say yes, I've got evidence that it's materially misstated, then I actually have extra questions that pop up that says, oh, okay, now we need to ask you more questions about those material misstatements. Okay, so I'm going to just close it back down. And so we are prompted for all of these points. If I say, for example, is other information presented in the financial statements? We already know that, because in 1050 we've already said yes, other information is. Supplementary information. Is it prepared in accordance with a fair presentation framework? Yes, because we said we are using IFRS for SME. So all of those ones are already included in there. Then at the bottom here, having answered all of these questions, it says, based on these questions, it looks like an adverse opinion must be expressed. Now, sure, now I wonder why, if I answered something incorrectly. Nothing's been answered there. Just quickly want to check. Yesterday it was reflecting correctly, so maybe I've just done something wrong now, but don't worry, we'll go back to it. So then we will actually just decide or confirm that we select the appropriate report. So this one's really bothering me now, but maybe I must just refresh. Let's just refresh. Oh, I can't refresh the tables. Okay. There should be a clean audit opinion. So I think something's just gone wrong in the script at the back. Also because I've played with a going concern one in the background. So maybe that one's also just now fiddled with this one. Okay, so when I open this up, I'll answer the questions. It should help me get to the right audit opinion. If I agree, then I will come to this drop-down menu here and select the correct one. Okay, that says, what is my conclusion? What will be my audit opinion? The next line says, click to view the report in the financial statements. And here I've got a little triangle to say, hey, hang on. This opinion, this unmodified opinion, is not the same thing that you have selected in the financials. So if you really want an unmodified audit opinion, you need to go and change it in the financial statements. Right, so here we really are checking all our bases. Now, having said that, we then go to the considerations of the audit report. So we've now decided what should the answer be, what should the opinion be. And now looking at the considerations of the audit report, we're basically checking that the audit report shows what it should. So basically what you're asking yourself is, does the audit report show everything it should? Does it have a title? Is it for the appropriate party? Is the first paragraph adverse opinion? Because our thing now says adverse opinion. Does it identify the actual client in the opinion? All of that. So if you literally take your audit report and you compare it to these questions, you can almost want to say honestly, go and complete it and get evidence that your audit report is right. You will pick up where things are accidentally reflecting another client name. Let's say you type your audit reports in Word, for example, and you forgot to change the client's name. You will see it because you are going to go check what's the client's name, or the financial year end, or any of those things will absolutely, you will pick up any of those accidental errors in your audit report if you go through this step by step. And remember, the client doesn't see your audit working papers. The client doesn't see your partner sign off or any of those things. The client sees the audit report. That is the product that they see as a result of your audit. So we want to make sure that not just is it in compliance with the requirements because we want to comply with the requirements, but also that we give the client the right thing based on what our conclusion is. All right, first questions, and then we get to the modification to help us to identify the modification and make sure the modification is appropriate. Then we said, for example, there's other information. So we also have a paragraph that will prompt you for other information. If I've determined that I need an emphasis of matter paragraph, I will have something similar for the emphasis of matter paragraph. So all of those things there are really important. I want to actually just quickly check here. Yeah, we spoke about the other information. If we, in number 5, for example, say, is it necessary to draw the user's attention to a matter in the financials? That's already disclosed, so that's your emphasis of matter. If I say yes there, then we see in the document map, I now have that section to consider if the emphasis of matter paragraph is there and if it is correct. All right, so make sure that you really consider the considerations of the audit report. One of my critical points also is the title of each statement. So for example, if the client calls their income statement the statement of profit and loss and other comprehensive income, that's what our audit report must say. It mustn't say income statement, and it mustn't say statement of comprehensive income. It must say statement of profit and loss and other comprehensive income. So these steps, these points will help us to get that right. Right. Good. I'm going to now close that one then, and then we can go to the next point. Just below that is key audit matters. Now, key audit matters, I'm not going to go through that so much, but it really just prompts you and makes sure that you carefully document all the documentation that's required for that key audit matter. And of course, only if it is relevant to your client. Okay. In our specific client, Wrap Up Manufacturing, when we did the planning for them, we said, no, we're not going to report key audit matters. So we're not going to include them in here. In fact, this specific document is actually saying you're not reporting key audit matters. So it almost won't allow you to do it if you decided not to do it. Great, reminding you in case you forgot. Then the next document is then also the manager's checklist and the senior's checklist. So those are just checklists for us to use as we go along. We will consider them again when we address the topic of reviewing the engagement file. So those two documents, senior's final checklist and the manager's final checklist, they are there for us to consider. We will also talk about the quality review documents in reviewing the file. So the next one for us is then the report to management. Right, so this is where we are going to report to management on all of those topics that we are required to report to management in terms of the standards. Now the script is just quickly running, updating. I wish it would have done that with my audit opinion one. Good, but what we will see so long is right at the top, you've got these letterhead spaces. So this is the report that we will give to management. So we will possibly put this on our letterhead. And if we need to put it on our letterhead, we can leave space here for the letterhead, so that when we print it to PDF, we then have it appropriately with the necessary spaces at the top and at the bottom. You literally pick the centimeters. Address it to the client and have the relevant date. But then what you see is there's a lot of paragraphs here that doesn't actually give stuff that the client can just read. It actually describes, tells you what you should communicate here. So just the very first one says, describe any identified or suspected instances of non-compliance. So if there weren't any, mention that there weren't any. Then the paragraphs with these references to the ISAs. Those are things that are required to be communicated. So don't just delete that paragraph or just go right click, hide this paragraph. If in fact you actually needed that because you needed to communicate that to, well, the standard said you have to communicate this matter. Right, so make sure that you're careful before you just hide any of these paragraphs. You can, of course, all of them are in input cells, so you can easily adjust them. You can either double click and then go and make the changes, or also in this, I just call it the formula bar here at the top. There you can also go and type extra stuff that you need to. And you can always add extra information that you need to. That's the covering letter. Then in terms of deficiencies, we have the tables. You might have already recorded matters to be items to report to management. So for example, here we have other weakness where we said the journal function on the accounting system is set up to only provide certain users access, but so-and-so has left the company and they still have access, and what is the implication, what's the recommendation, and so forth. So that's the table. I'm sure many of you are familiar with the report to management table. Now here, the important thing is that we should only disclose or only communicate in the weakness column facts, not how we feel, I almost want to say, but really facts, give details. Implication, why is this a problem? Why are we concerned? And then in the recommendation, it's got to be, I almost want to say, a solution. It has to be an appropriate and doable suggestion for the client to address the problem. It shouldn't just be a textbook answer to say, have 2 people approve the payment, but meanwhile, the client only has 1 person in accounting. Okay, so it's got to be something appropriate for that client. It's got to be something that the client can actually do, and it must obviously address the problem. All right. So that is important in terms of the management report items. We have the overall deficiencies, and then another other option, and then you also have financial statement areas. And as you can see on the left-hand side, then you have options for every single section or area that is activated in the audit sections. Next up, then, we have the letter of representation, or the management representation, or the written representation. I guess you could really come up with almost any of them. And here, again, we have the option for letterhead spacing to be added. And then this point that says, will this representation be made by an individual or by a collective? In other words, by the board of the directors or something like that. Because if you say yes, it will basically provide you, sorry, that's an individual, to say I, and then collective is to say we, and at the bottom, we then have space for the financial director and even an additional person. You even have the option to add another person to sign in. So that's really quite great, where you can have 2 people sign or just 1 person sign on behalf of the board. Right. The important part with the representation letter, remember, we have to have one, and the paragraphs are prescribed. So if we look, for example, at paragraph 1 and 2, well, paragraph, where are those paragraphs again? There are some of those paragraphs that requires specific points where we have the references again. But in terms of the points here, most of them are quite standard ones. I want to actually just have a look at paragraph laws and regulations. So this is everything that they are saying to us. We've disclosed to you all instances, so forth. There's going concern. We've disclosed all the information, subsequent events, fraud, and then uncorrected misstatements. Look at this one. The effects of uncorrected misstatements are immaterial, both individually and in aggregate, to the financial statements as a whole. Now, look at this. A list of uncorrected misstatements is attached to this representation letter. So make sure that when the client signs this, they also sign the list, the schedule of audit differences. And that schedule of audit differences should not just include your journals, but also your unadjusted disclosure differences or misstatements, if you want. Right. Good. So all of these ones are then there. You can tailor as necessary. Just make sure that we are tailoring, that you are doing it in line with the framework, the auditing standard. And then, as with all the other ones, if you need to change it, you right click and you select editing enabled. You change it, and once you've changed it, you just remove the editing enabled. All right. Good. So that is the letter of representation. And that then is also the complete section of the probe topics that we wanted to address. So yes, there we go. For the slides again, that's the same slide I showed you earlier on, and that we had a quick look at for all of these items. Then just looking ahead again, just as a reminder, next up is auditing disclosures on the 13th of March, and then reviewing. Other than the other tracks, many of the other tracks have e-learning. This track doesn't have e-learning, so that's a good thing. But it is, well, it's great that you do then actually attend the live sessions. If you do have to miss a live session, the recordings will be available both on the Success Community and on YouTube. So don't feel like, you know, let's say something happens, you missed the second one, you shouldn't then attend the third one. Please, you are obviously still welcome to attend. And then as a last point, I want to ask that you please complete the post-course survey for us. I just want to add it to the chat as well. So I have included the QR code there on the slide. But if you want to go and completed from the hyperlink from the chat. You can follow that. That's the most recent one. So that's an office form. You'll see there, it's the post-course survey. So if you will please go and complete that for us, I would be most grateful to you. Yeah, and that is then it. We're then looking forward already to you joining us on the next session. Please feel free to leave your comments as you need to in terms of how today's session was. Are there any other topics that you would want us to discuss, future, etc., etc.? So thank you for your participation. Thank you for joining us today, and have a lovely rest of the day and weekend. Goodbye.